Write a short note on interbank participation certificate. Interbank participation certificate IBPC. The interbank participation certificates are short-term instruments to even out the short-term liquidity with the banking system, particularly when there are imbalances affected the maturity mix of assets in banking book. The primary objective is to provide some degree of flexibility in the credit portfolio of banks. It can be issued by scheduled commercial bank and can be subscribed by any commercial bank. The IBPC is issued against an underlying advance classified standard, and the aggregate amount of participation in any account time issued during the currency of the participation. The aggregate amount of participation should be covered by the outstanding balance in accounts. There are two types of participation certificate, with risk to the lender and without risk to the lender. Under with risk participation, the issuing bank will reduce the amount of participation from the advance outstanding, and participating bank will show the participation as part of its advances. Banks are permitted to issue IBPC under with risk nomenclature classified under Health Code 1 status, and the aggregate amount of such participation in any account should not exceed 40% of outstanding amount at the time of issue. The interest rate of IBPC is freely determined in the market. The certificates are neither transferable nor prematurely redeemable by issuing bank. Under without risk participation, the issuing bank will show the participation as borrowing from banks, and participating bank will show it as advance to bank. The scheme is beneficial both to the issuing and participating banks. The issuing banks can secure funds against advances without actually diluting its assets mix. A bank having the highest loans to total asset ratio and liquidity bind can square the situation by issuing IBPCs to the lender. It provides an opportunity to deploy the short-term surplus funds in a secured and profitable manner. The IBPC with risk can also be used for capital adequacy management. This is a simple system as compared to consortium type.